The restaurant, the supply of food or beverages for human consumption at the place of, that has been declared as a supply of service also. This will bring at least some respite and clarity. There are other issues which I will not be going into, but these are certain, how the whole structure is taking place. Schedule 2 is also important when we have to determine that whether particular activity falls under that any of these Schedule 2 activities, because it has been artificially declared as a supply of goods or supply of service. The prima facie one may find that this is a supply of goods, but it might have been declared as a supply of service. So that's why it is very important. Coming to the next part is there are two other important terms which need to be kept in mind, because every now and then there could be some issues on this, and this is composite supply and mixed supply. So what is composite supply? It is a supply of two or more goods or services or combination of both, where one of them is a principal supply and other are merely incidental or ancillary to the principal supply. The example which explains this is that when a person is supplying the goods, at that stage, the buyer, it is a X works. So therefore, transportation, transit insurance, everything is on the buyer's account. However, the buyer requests the supplier to arrange for the transportation to be reimbursed by him, arrange for the transit insurance to be reimbursed by him, for some special packing to be reimbursed by him. This is a combination of goods plus three services: transportation, transit insurance, and packing. However, this is a composite supply for the reason that supply of goods is the principal character of the transaction. Buyer is not interested into transportation, transit, or packing per se. He only wants the safe delivery of the goods. So this is a composite supply. Once this is a composite supply, then it will be treated as a supply of goods in spite of three services being included into it. So it is a supply of goods. This is important because the taxability will depend upon whether it is a composite supply or whether it is a mixed supply. And what is mixed supply? Mixed supply is one which is not a composite supply, but still which is a combination of two or more independent supplies of goods or services, or a combination of both for a lump sum consideration. Explained by an example: if a company orders for the Diwali gift for its customers a box, gift box, which contains dry fruits, which contains chocolates, which contains cookies, and which contains, say, anything else also. Now this is a mixed supply, because all three are dry fruit, cookies, Cadbury's, biscuits. These are all independent supplies by themselves. They are not naturally bundled together, right? They are all independent supplies. This is a mixed supply. Now, if there is a composite supply as defined and explained in law, then the liability of GST will be on the basis of the principal supply. So in the given example, it is supply of goods. Even though transit, transportation, and insurance is there, still it will be treated as a supply of goods. And GST will be payable as if it is a supply of goods, without bifurcating anything into that. But if it is a mixed supply, then the item which carries the highest rate will be applicable to the entire pack. So if you are mixing cookies, Cadbury's, and the dry fruit in a gift pack, in a Diwali gift pack, then the entire gift pack will be subjected to the levy of GST at the rate applicable to dry fruit. Coming Diwali, be careful. And this is important, overall important. Now, I'll come straight to the next part, and that is registration part. The registration will be required by a person who has exceeded the threshold. Threshold is 20 lakh. Threshold is 20 lakhs in all the states except northeastern states and the hilly states of Sikkim. And there it is 10 lakhs. This 20 lakhs is an aggregate turnover. Aggregate turnover has been defined as including all taxable supplies, exempt supplies, non-taxable supplies, interstate supplies, including exports. The sum total of this is an aggregate turnover. This is in stark contrast with the current scheme of small-scale exemption, where 1.5 crore exemption for manufacturer does not include trading activity, does not include exports through merchant exporter or direct exports, and the 10 lakh exemption under service tax does not include the non-taxable services or exports. Here, everything is to be reckoned for the purpose of aggregate turnover of 20 lakhs. Exempt supplies means exempt which is exempt under a notification. Section 11, central government has power to notify any goods or services, the supply of which should be exempted, and also includes non-taxable supply. Now, this is to be again kept in mind with section 9, subsection 5, which says exempt supply, section 17, subsection 5. There is a very important aspect here, that today exempt supply includes non-taxable supply, which is again is not the scheme of the things under the threshold exemption in the current regime. And what it says, there was some apprehension that goods has been defined as a goods means any movable property, including actionable claims and security. That has now been taken care of. So we need not worry about securities have been governed under goods, and securities is service also. That anomaly which I had pointed out in June, that has been taken care of in November, and now it is no longer there. So securities are outside the purview. The point is, what has been left out is, service is defined as services means anything other than goods. If service means anything other than goods, and immovable property is not goods, will it be taxed as a service? That was the apprehension, according to me, totally unfounded apprehension, that was conveyed to the government. So government sprang into action. So under Schedule 3, now sale of land, sale of building, unless under construction building, under construction are subjected to service tax and works contract tax even today. That will continue even under GST regime with the occupation certificate, prior to occupation certificate and after occupation certificate. But sale of building per se, so complete unit, we will treat it, complete building. So sale of building, sale of land, trading in securities, these are treated as declared as a non-taxable supply. These are non-taxable supply. So far, so good. But exempt supply includes non-taxable supply. This is further made clear in the context of proportionate reversal of credit, where it is clearly provided that for the purpose of proportionate credit reversal, exempt supply shall include sale of land, sale of building, other than under construction, trading in securities, and supply on which tax is payable under reverse charge mechanism. Now, what happens is, if, let us assume, a taxpayer in his individual capacity is engaged into taxable supply of whatsoever nature, as a stockbroker or otherwise, the very stockbroker has also got some ancestral property in native, which is in his name. He is discharging his GST liability in his stockbroking activity, or any other activity, PMS or whatever. It can be anything. Even I can come under this, advocate, chartered accountant, whatever. And he sells his land, which is there in native, which is in his name. The sale of land is a non-taxable supply. Because it is a non-taxable supply, it will be considered as an exempt supply. So at that particular point of time, this person will be considered as being engaged into two activity, taxable supply and sale of land, non-taxable supply, which is exempt supply. So whatever credit he takes, he will have to proportionately divide it. Because sale of land will reflect into his balance sheet, income tax return. The nexus, there is absolutely no nexus with his procurement of the input and input services on which he is taking the credit. That has nothing to do with his sale of land. It is a passive transaction as such. Still, it is an exempt supply. Therefore, he will have to account for, so whichever credit which cannot be attributed to which is common in nature, suppose that proprietary concern, he is availing the services of the auditor. So the auditor will charge him in his proprietary concern and not activity-wise, on which auditor will charge him GST credit, CGST, SGST or whatever. He will take the credit of that, but this credit cannot be related to his taxable or sale of land, because sale of land is also getting, that entire land sale is getting reflected into the balance sheet, which is a part of his audited annual accounts. then it is a exempt supply and it is a taxable supply. You have to proportionately divide this. This is the impact of this. Sale of building. We don't know today whether the flat in the building will be treated as a exempt supply or whether it will be liable to or not. Because they say sale of building, Deepak bhai, it does not say sale of part in the building. Today if I sell my residential flat or my commercial flat, am I supposed to pay GST? As of now, we have no answer to this. Does not appear to be the intention, because these are all totally out, but today I would not vouch for that. As such, if I go by the plain interpretation of the law, right? The registration, so aggregate turnover and exempt supply, there is a tremendous scope of this. We'll have to keep it in mind. Coming to the other part of, and that is the input tax credit, which is the core feature. I started from cascading effect of tax on tax. So input tax credit is available on all. The words used are input tax credit, means the taxes in the form of CGST, SGST, IGST charged on as an input tax on any supply of goods or services. So credit of only 3 GST will be available: CGST, SGST and IGST. All other taxes which might be paid or payable, no credit of that will be available. Whatever, in whatever form, for whatever purpose it is paid, credit will not be available of that. Only credit of CGST, SGST and IGST will be available, provided these goods or services, including capital goods, are used or intended to be used for the business. At least this intended to be used phrase brings some consolation, because it is a much wider and clearer term than the current phraseology which is used in the context of capital goods rule 2A Senvet credit rules, input rule 2K and input service rule 2L, in or in relation to the manufacture of the final product or for the provision of service, etc., etc. Now it is intended to be used, so that is available. Capital goods is important. Capital goods is for the first time defined in a very pragmatic and prudent manner. Right now, the capital goods definition under Senvet credit is by the chapters or description or headings, right? However, under GST regime, capital goods has been defined as capital goods means any goods, the value of which is capitalized in the books of account. This is a very pragmatic definition, which is capitalized in the books of account. So that definition has to be kept in mind. Coming to the input tax credit, everything is available barring motor vehicles and conveyance, even if it is used for the business purpose, no credit. Food, beverages, outdoor catering, health services, cosmetic and beauty parlor, unless they are falling under the same category, no credit. Anything for personal consumption, no credit. These are all restrictions which are continuing right now also. And any goods which are lost or stolen or destroyed or written off or given by gift or sample, credit has to be reversed, no credit on that. You will have to maintain the records of that. Coming to the utilization of credit, here again one has to be careful. So first, when you take the credit, one has to see whether it falls within the 4 corners of the allowed the goods or services eligible under section 16. Section 16 provides for on which credit will be available and what credit will not be available. What are the 4 conditions for taking the credit? Please understand, friends, GST is going to impact your cash flow in a huge manner, because every person is expected to come under the tax net and charge you GST. For you, for a company taxpayer, it becomes imperative that all the transactions of procurement are correctly captured so that not a single paisa credit is lost, because that will probably will define your profit element. It can have a bearing on your profit element. Whatever is lost is lost. Now, the 4 conditions. Goods and services shall have been received. 1. Invoice should have been there. Prescribed invoice should have been there. 3rd, credit will be available only if the supply on which the credit has been taken, that tax has been paid by the supplier. Please bear in mind, if the supplier doesn't pay the tax, the buyer will not be entitled for the credit. This can have again, so one will not only have to ensure the compliance of his own but he will have to see that all his suppliers are basically complying with the law. And this law has been worded in such a manner that if a supplier at the end of the month in his return has declared a 1 lakh rupees of liability for 10 supplies made to 10 different people, out of which a particular taxpayer has actually availed 15,000 rupees credit for his supply, and that supplier pays 99,000 rupees, does not pay 1,000 rupees, entire credit of 1 lakh will be disallowed to all the 10 buyers. This has its roots because of the mass scale invoice scam which were unearthed in the recent past. Deepak Bhai is all aware of that. That bogus invoice and supplies and fictitious invoice and all that. But I know the untold misery it will inflict upon everybody, but there is no respite because this was the first condition of the states that if you go ahead with the GST, we want this provision to be made. So you'll have to continuously ensure, and this has resulted into almost all the large and the major companies resorting to the vendor sanitization process. ABC analysis. I will deal with A, I will keep a watch on B, and I will not deal with C. There are letters and letters which are now flying. Okay, tell us your HSN code number, tell us your migration code number, tell us your percentage of cost, what have you done, how are you, what records are you maintaining. They are poking their nose into the other's business completely. So much so today I saw a letter whereby a major buyer to my client has asked even what is the percentage of our cost, material cost, and complete costing he is asking for. Whether rightly or justifiably or not, but that apart. But this is important, we have to live with this. Coupled with this, there is a matching of the invoice. This matching of the invoice concept, which is right now in goods under J1, J2 form, that has been in actually introduced in full-fledged manner in GST. And this I will not go, it is complete technical, I will not, there is no need for me to go into detail. Suffice to say that every single person who is registered in a state will be required to file only 36 returns per year. 3 returns per month, 1 annual return, so coupled with that 37 returns. 36 compulsory plus annual return in the next year. These are compulsory per registration, per state. On 10th, outward supply. On 15th, inward supply. On 20th, monthly return. This is compulsory. If you are holding input service distributor, then another 12 return by 13th every month. For a people who are under composite levy, it will be 18th on a quarterly basis. Then there is an electronic commerce operator who are supposed to file the return separately for their TCS, tax collected at source. There are certain specified notified supplies up to a value of more than 2.5 lakh, which government may prescribe under section 51, where there will be a TDS of 1%, for which there is a separate return. Then non-casual casual taxable person, non-resident taxable person, separate return. So these are all independent returns which happen mainly for our purpose. 37 returns per registration for an entity per registration. Again, I am repeating. So if you have registration in 10 states, only 370 returns per year, which are required to be filed. And the last condition is, fourth condition is, the taxpayer should have furnished the return in terms of section 39. Any delay in the return will result into probably defeating your claim. I read this condition as applicable to the taxpayer, that is recipient, and not to the supplier. According to me, this applies to, so it means the recipient also will have to file the return in time. Friends, registration and returns, no compromise on that. No delay, nothing. You will have to take it very strict view that I will have to comply with the law within time as per law. Whether my non-obtaining registration or delay in obtaining registration or delay in filing the return is a condonable lapse or procedural lapse, etc., please do not enter into that. The current rulings and the principle laid down how far they will be applicable in GST region, it is not worth trying also. If you have to comply, you have to comply with the law from the day one. So these requirements of coupled with the invoice matching, every credit which the taxpayer will be taking is a provisional credit for 1 month and 45 days approximately. And thereafter it will get assessed finally. Everything will be on the GST portal. Everything automated. It is said that GST and network is expected, is geared up to handle 3 billion invoices per month. 3 billion invoices per month. However, whether the taxpayers of the country are geared up to get into automating mode or digital mode or not is a question. I don't know whether there will be complete chakka jam beyond 1st July. And how many of the taxpayers will be able to file the returns for the month of July. There is a huge challenge. Your complete front-end operations and back-end operations will have to be revamped. And all the capturing of your transaction will have to be real-time. We are all aware about RTGS, real-time gross settlement. It will be a real-time invoice capturing, complete. There is no escape from this. It will have to be done. Coming to the utilization of the credit, 3 aspects, the 3 credit which will be available is, the first is CGST, SGST and IGST. Now CGST and SGST will be on the intrastate supply, and IGST will be on the interstate supply from outside the state. This credit will be available. How it is to be utilized? CGST only for CGST and thereafter for IGST. SGST only for SGST and thereafter for IGST. IGST first for IGST, thereafter for CGST and thereafter for SGST. This order will have to be maintained mandatorily. No compromise in this order. Any mistake in this will result into the wrong utilization of credit, leading to the short payment of tax plus demand and recovery. I'll repeat, CGST for CGST first and thereafter for IGST. CGST cannot be utilized for state GST. State GST for state GST and thereafter for IGST. State GST cannot be utilized for CGST. And IGST for IGST first, thereafter